welcome back to Talking Fitchburg. Very special interview today. It's the first time I think we've pulled you two together in the Talking Fitchburg realm from the assessing department and from our finance department. Both directors here. We've got Chris Letts, Misty Dodge, gracious enough to talk about, and Misty and I for the last several years have gotten together and talked about the tax bill, break it down for your property tax bill. But we invited Chris in because we heard a lot of feedback during referendum on better, want more understanding of assessments, and then how does that work down the chain, so to speak, to your property taxes. So having you both here today is super cool because I'm right here to want to learn a little bit more myself. So very excited. I'm going to geek out, and hopefully you all will find this very helpful. So Chris, we'll turn to you in the step one. I wrote down step one. When we look at assessments, and what you guys are doing to hand some numbers over, so to speak, down the chain. Why don't you just tell us a little bit about the assessments, kind of set us up here, and then we will work towards Misty on explaining some of the property tax bill stuff.
Sure. Yeah, so our first, our assessment date starts on January 1st. It's really kind of a nice date. It's, it works well for us. It works well for property owners. It's a nice solid date each year. Everybody remembers it. It works well. So from there, your assessment is based off the condition of your home or business or whatever your property is as of January 1st of a given year. So we start there. We do a lot of work preliminarily before that. If there's stuff we know, like if you took out a permit to replace your deck in August, we're not coming out. We're not doing all our field inspections the last week of December. So we do a lot of work. We start on our assessment roll kind of earlier, later in the summer, earlier in the fall. We make sure that we have all of our assessments, current in condition as of that January 1st date. From there, we work through a lot of analysis work that looks, it kinds of depend. There's two types of assessment rolls. Let me back up. You've got a maintenance assessment roll, which we did in 2023, where most properties don't really change. We really just assess for physical changes. That would be if you add a deck or, finish your basement or, redo your windows or whatever. And then we have a revaluation year, which is what we actually did this last year for 2024, which is driving where your tax bills will go this year. Now, I'll let Misty talk to the tax side of that, but from the assessment side, we look at where the real estate market has changed, just specifically based on market characteristics. So if we find that the real estate market has increased, on average by like 10%, you'll notice most of our assessments go up about 10%. Now, each neighborhood or property type is going to have some variation in there, but broadly, when real estate values go up and we do a revaluation, most assessments go up. So from there, we finalize our assessments in that, late springtime usually. Try to send out our assessment notices, preliminary assessment notices in May. And then from there, we get into kind of the appeals process, which is really where property owners can have an opportunity to check our homework, more or less. So they, you'll get a notice in the mail that says, hey, my property increased to, I don't know, whatever it might be, $500,000. And you say, okay, well, that seems high, of course, but it seems right, so whatever. And then you can throw it in the, your filing cabinet, whatever have you. But if you're like, hey, this actually seems a little bit too high, I don't agree with that, you can come down and talk to one of our staff. Provide some sort of insight as to maybe we have, a data inaccuracy, maybe we have 3 bathrooms and you only have 2 or something like that. If there's sales in your neighborhood that seem to conflict with where your value is, bring them in. We'd love to, kind of see what your thoughts are, I guess. And then it gets into a more formalized procedure called Board of Review, which is where if there's still a disagreement kind of after that informal open book process, you can come into a board of appointed officials. They're appointed by the mayor. Have training in assessments in real estate that usually have some sort of background in that field. And then from there, you kind of state your case, we state ours, and then the board decides on, which valuation seems to be the most credible. So from there, that's kind of the end of our yearly process. Usually we try to wrap that up sometime mid to late summer and then start all over again. So my goal is usually to be done before budget season. So that way we've got some good estimates that I'll let Misty kind of talk through her procedure, I guess. Is that?
Yeah, and so and we will come back. I know there's some questions right there, but I'm going to keep the process going, then we will circle back to it. So Misty, after he turns over the role over to you, what happens next in the process?
Yeah, so Chris gives me all of the assessment data for the properties you assess. There's also the state that assesses another kind of category of properties. We don't get that information until October, but Chris and I work together to try to estimate what we think those numbers will be. And I take all of that assessment data, or not the data, but the number, that overriding number, not property by property, but total, and I put that into the budget calculations in order to figure out what an estimated tax rate would be for people. The budget is not dependent upon tax rate, but it is a piece of information that's really helpful as we're going through the budget process, because the elected officials want to make sure there's a balance between the services that are provided and the cost that it is and what those increases may look like each year. So we take that information in order to calculate what those estimated tax rates are. During our budget process, it's a very public process. The mayor puts out her proposed budget as a start. There's a public hearing about that. Everything's posted out on the website. Council then can submit amendments and potentially change the budget. But at the end of the day, we have a budget that's adopted. It's usually that first meeting in November. And they basically establish what the priorities are for the city from a funding perspective, and then also set what's called the property tax levy. That levy is the total amount of property taxes my team needs to collect in order to pay for the budget for the following year. And so Fitchburg does that, but then also each one of the school districts does that, the county does that, MATC does that. Everybody sets their levies, and then they give all of that information to me too, so I know now how much in total I need to collect from everybody in order to fund all of the budgets that are paid for through the property tax bills. So then we transition to tax bills, and so at that point we have the manufacturing numbers.
Yep.
If you were a little delayed, there might be some tweaks there that happen. We generally have good estimates at the budget time, but I get those final numbers from you. I get those final levy numbers, so I know how much I need to collect, and then I know how I need to allocate it to everybody in order to generate the tax rate and then the specific tax bills. Tax bills usually go out between December 12th and 15th is kind of what we shoot for. Statutorily required to be mailed by the third Monday of December. And then I know a lot of people like to pay their tax bill by the end of the year for income tax purposes, but that first installment's not technically due till January 31st. And then second installment, if eligible, would be July 31st. So you see there's a long process here, right? I mean, you talked about 1/1. I'm talking about 1/1 too, but it's different years for the same process.
Yep.
All right, so the first, hopefully I'm going to get these questions right as we go through it. First question would be to Chris, is if your property assessment goes up, are you paying more taxes? And do those interact?
It's a great question. So the short answer is sometimes. In a maintenance year, almost always yes. So I'll maybe let Misty speak to her side of it, but kind of usually in a revaluation year, when you have everybody that, assuming like in 2024, most everybody's assessment went up. Now that doesn't allow us to increase our tax rate at the same pace. So say just because everybody's assessments went up 20% doesn't mean that, oh, that's great, we have another 20% that we can now add into our budget. It doesn't work that way. So in revaluation years, kind of it's an average, I guess we'll say, but often enough, there, like for 2024, this revaluation we did, our average change was around 21%. It varies by neighborhood and property type and what have you, but if you went up around that average change, you'll probably notice a slight increase in your tax bill. But there's some properties in 2024 that maybe went up quite a bit less than the average, which there's probably, I know there's a couple neighborhoods that went up in the teens for an assessment increase, but I suspect that some of those tax bills probably went down a little bit. It's all, the goal of a revaluation is to essentially bring everybody up to market and kind of appropriately distribute who pays what of that total tax levy. In some cases, if there's a down market, for example, like whether it's office buildings or some sort of market segment that's not appreciating or hasn't grown or has declined, we want to reflect that in our assessments as well. So that was kind of a long-winded answer, but
you got us there. Actually, I think you made some good pieces. And the same question. So somebody's looking at their tax bill and they're like, hey, my assessment went up. Misty, is my tax bill going to be up? What would you say?
Yeah, and so to your exact point, so the average went up 20%. the levies, the total amount that I need to collect, didn't go up that much. So the tax rate actually dropped in all of the school district. The average was about 14% because, again, I have the amount in total that I need to collect. And so the amount that I need to spread it over is more, but the math that I use in order to calculate that tax rate dropped quite a bit. So not everybody went up, many did, but that was mostly a function of the budgets increasing and the need for me to collect more taxes to pay for the budgets for all of the jurisdictions, not necessarily the assessments going up.
Right.
And Chris, from your standpoint and as a whole and understanding why we do assessments, you really are trying to get everybody to pay their fair. If you were to sum it up in one big, you know, you want everybody to pay their fair piece of the tax, of said taxes. So goal here is to make sure that it's an even keel. Everybody's kind of at, doesn't mean that just because your house and your house are different and everything else, but you're trying to find that right balance. Is that a good summary of kind of getting to, you know, why you're doing the assessments? There are a lot of reasons, but one important, and I'll ask the follow-up too to that.
Yeah, so in essence, I shouldn't even say in essence, our duty as assessors statutorily is to assess everything at, you know, at full market value. And so the real estate market is very dynamic, changes, especially over the last, you know, 5 to 10 years, things have changed a lot. So it's, you know, we're bound by state statute to have assessments at full market value. There's a threshold within there, you know, we have to be at, you know, within 90 to 110% of market value once every rolling 5 years. But that goes out of compliance pretty quick. You know, we did a revaluation in 2022, shortly before I arrived here. And 2023, we did a maintenance year, and we were almost 15% out, you know, out of that 100% threshold. So it's important to follow the market, especially in a dynamic market, because you're right. We want everybody to pay their fair share, and you know, if you have a house that isn't appreciating at the same rate as others, you by statute you shouldn't be required to kind of foot that same tax bill as others. So.
Any follow up on that for the tax bill side? I know there is, but
yeah. So from a tax bill perspective, it's the same goal. So we want to make sure that the taxes are allocated to everybody appropriately. And so the great work that you guys do is an input into my process, just to determine how those bills are calculated individually, not as a whole.
Yeah.
And actually, a follow up to one of the when you get to sitting at budget time, and you're saying this is what the number is for folks, and you're trying to match that. Whatever council brings in for budget time and are moving that again, they kind of get what Chris is giving you as a number, and I'm saying this really in broad terms here, so pardon me. But at the end of the day, again, as far as property taxes raising, it's a council decision to decide how much they want to based on budget and what they approve or not approve. And I think just re-saying that one more time based off of what you get from Chris and just re-inputting that one more time for people, because I think now that you hear, you know, where we've got to in this part of the interview, I think it's important to share that.
The one piece I'd like to clarify, if I may, is that yes, the council sees the estimated assessed values because I put that in as a summary, but that does not play into the actual budget calculations at all.
Right, and I knew I was going to say one piece of that wrong, but I think it's important to know that you know, again, there's a lot of things that correspond here, but at the end of the day, it's going to depend what is approved by budget on how much your property taxes are going to go up, but it doesn't always correspond with the assessment if you say it again broad terms as I'm trying to as paying your fair share and then paying the different. We talk about too breaking it up. The different jurisdictions too also throws kind of a wrench into it as well. So, any other comments? I mean, we could sit here all day and just go. Picking your tooth braid is pretty interesting, I gotta say.
I have one for you actually. When I first started in this industry, I knew that assessments existed. I didn't realize or appreciate how much data is involved in what you do, and just the volume of data and that very precise process by which you do it. Do you want to speak a little bit about kind of how you do assessment?
Yeah, so we do what's called mass appraisal. So, you know, if you've bought a house before, you've had an appraisal on your house, most likely. And so it's a version of that, but the appraisal you have when your house is done that's, I don't know, usually they're 60 to 80 pages of just every little data point. We do a bit of a hybrid approach. We have property-specific data, you know, square footage, bathroom counts, you know, all that kind of stuff that's been, you know, as houses are built, and we modify that data as you might modify your home. But then we look at broad neighborhoods, so that we do a little bit of like trending and analysis and kind of more larger market statistical work, and that really is kind of the backbone for each neighborhood. So like if for most houses, if you look at a specific neighborhood, they're going to increase. There's kind of static data, which is very physical. Again, that's your bathroom, bedroom counts, that kind of stuff. But then we have kind of our market data that drives the backside of that. So there's a lot of pieces that go into it. But it's kind of what drew me here. I like doing analytical work, so it fits well. Yeah.
Between the two of you in this room, it fits very well, if you ask me. The love of spreadsheets and everything else in between, I know it comes from your two departments for sure. All right, so certainly I appreciate both of your times going through this. I hope we can have more conversations together, because I think it brings some light onto things they may not see how they correspond really well, but you two sitting here is pretty awesome. Chris, if people do have any questions about their assessments in general, trying to understand the process, what's the best way that they reach out to you?
Yeah, so we have a department email. It's assessing at fitchburgwi.gov. So if you want to email it, that's fine. Otherwise, you can give our office a call really at any time. We've always got somebody here, or if we don't answer right away, just leave us a voicemail. And phone number is 608-270-4235. If you want to contact me directly, it's 608-270-4237. So reach out to us. We're all trained, certified by the state, so we've all got a pretty good base of knowledge and like chatting with people, so give us a call.
I know, that's one of my favorite things to say. They want to talk. You want to talk to them. They want. Everybody wants to talk to people, so that door's open. And then, Misty, as far as any questions on the tax bill, when you come in, you certainly can ask some questions, reach out. Again, we'll be talking about all this coming up, but if anybody has any general questions, how can they get a hold of you?
Yep, same way. So call the office if you want. We also have an email address. All of our contact information is out on our website. And we also try to load as much information onto the website, too, so people can get it at whatever time is convenient for them.
Perfect. Thank you both so very much. Hopefully I've interjected some good questions in here, but appreciate your time either way.
Yeah, thanks, Jeremy.
Thanks, Jeremy.